Hello everyone, welcome to RedBest US channel. In this video, we'll look at the latest US Department of Labor guidance that was given regarding LCA requirement for end clients. This is based on the DHS final rule that came out at the same time. It's going to impact about 247,000 LCAs. So we'll look at that as well and what are the other requirements. If you haven't subscribed to our channel, do subscribe to our channel for getting regular updates. So this is what we will cover in this video. We'll look at the background and what the requirements are, and then we'll look at the effective date and the impact. So just for everybody to understand the background, we'll quickly look at that. So if some of you recall, there was a DHS interim final rule that came out on October 8, 2020. And that had a lot of changes like revising the definition of H1B specialty occupation, the requirements and also supplying contracts. So a lot of them, right, which had also 1-year approvals, more site visits and all sorts of things. And what happened was that after that was, made effective as interim final rule, it was cancelled by courts in early December based on multiple lawsuits. And the reason for that was they said DHS did not follow the proper process and comment rulemaking. And eventually, recently, like on Jan 15th of 2021, what DHS did was they took a part of that interim final rule and they changed the interpretation of employer-employer relationship and also changed the definition of US employer and then published a final rule. So with that change in interpretation, they basically changed, from existing thing that had like higher fire pay and other sorts of things to saying that it will be based on conventional master-servant relationship consistent with common law. So we will talk about this in other video, or you can watch that on multiple details on that. But basically what it did is when the interpretation changed, the common law test, end client now has to file the separate H1B petition for third-party placement kind of scenarios. So that's the big change. Now, what happens is with that change, the other aspects also change. For some of you who do not have the background, this is how it works in terms of how the end client and secondary employer. So we use these terms, secondary employer or common law employer, all these sorts of things. But basically, primary employer is the one who hires the employee and who sponsors H1B visa for that person, and then he places that person in the third party or the end client location. So all of these terms are used interchangeably. So in the past, only primary employer would sponsor and they would just file an LCA at the location and then they would go there and work. But now some of these things are changing. So I'm just putting this slide out here so that you understand that these terms end client, secondary employer mean the same, and we'll use these terms extensively in the rest. So now, in general, there is an INA rule that Immigration Nationality Act rule that says that any H1B petition that you file with USCIS that needs to have a corresponding H1B LCA, and the reason for that is to meet all the conditions of US workers, similar to US workers, and wage compliance and all sorts of things. Yeah. So this is a standard requirement. Now, with the requirement of that end client or secondary common law employer, who is the same word, right? That they have to file separate H1B petition for third-party placement kind of scenarios. Now, end clients also have to file H1B LCAs to meet this general requirement. So, it's basically as there is new H1B petition, new H1B LCA has to find. So it's pretty straightforward. And this is the guidance statement from the guidance. We've taken a screenshot of the actual guidance. So it says USCIS will now allow secondary but common law employers to file petitions, and OFLC must begin requiring LCAs from these employers and educate them, right? So this is what the whole point is, right? So you need a new LCA. So that one is clear. But what happens is with this change of LCA, there are a lot of obligations that end clients have to carry now. So that is what comes into the picture. So the first part is multiple LCAs end clients obligations, right? Now, with H1B workers, working at third-party placement locations, they would have multiple LCAs, and there'll be multiple H1B petitions because filed regarding them concurrently, right? So now, because there are multiple things, as per the LCA compliant requirements, both the client and the primary employer have to be compliant and meet all of these requirements, right? So the first one is wage or salary obligations. So what happens is, let's say, typically what happens is the wage requirements would be different from the primary employers, LCA, in comparison with the end client LCA sometimes because of the location changes and, how they're actually working. So for example, if the minimum wage for that for the primary employer LCA is about 70k USD per year, but at the client location the LCA, because now that we have a new LCA, that will be 90k USD. Now to meet the requirements, the H1B employer has to be paid 90k to meet both the wage compliance. So it does not mean that they have to be paid twice, which is basically adding up of both of them and getting 160k. They just have to be paid once, but the highest of the minimum wage of the LCAs have to be paid. So this is very, very important because sometimes the employer would be based in a place like Texas, and sometimes would be commuting to work in a place in like San Francisco. So the wage LCA requirements would be very, very different, and now they have to be paid of the highest of them to be able to be compliant. So this is actually going to impact a lot of third-party placements. The second one is benefits, right? The benefits part is the obligation is that they have to meet the benefits equivalent in both places. So for example, paid vacation is 10 days now with the primary employer. Now at the end client it may be 15 days paid vacation. Now to meet that both of them LCA obligation, the H1B worker now has to be paid 15 days of vacation. But again, these are reasons, clause in place to ensure that the conditions are similar to that of US workers. And end clients could have general requirements put in place, like you have to be working for 6 months to be able to get the full benefits and all sorts of things. So that one you can still have in place. In terms of payroll compliance, this is a big one actually, I would say. So the end client now has to keep a record of the payroll of the H1B worker who is working at the client side. Technically he's a contractor working third-party placement, but now even though he's not a direct employee, he still needs to have copy of the payroll records. So the copy of payroll records have to be maintained for audit and compliance. So they also have to retain payroll records of US workers in the similar job, because they can be audited by DOL as needed in the future. So this is going to be very, very tricky situation, because end clients now would know how much their contractors are paid and all the margins and everything. So it's going to be a big issue that they'll have to deal with. Other things which are standard things are like notification and strikeouts. So if let's say they are hiring H1B worker, they need to be notified, about posting in conspicuous locations, or other aspects as well, like the unions and everything as well, right? So this is a standard thing. These are all LCA requirements, nothing new. But again, now the clients have to comply with all of these. So they need to make sure they actually all the conditions are similar to that of US workers, and all the normal processes are followed, right? And there are additional checks in place if you're H1B dependent employer or you are a willful violator. So it's a shared responsibility, they say. And, additional checks are like that, you cannot lay off a US worker within 90 days if they hired H1B worker by filing an LCA. So there's an additional check. And H1B dependent employer is somebody who has more H1B workers than regular employees, right? This is a requirement. Like if you're 25 or fewer employees, then if you have at least 8, then you're H1B dependent. Or for large companies, if you have 50 or more employees, and if you have 15% of them as H1B workers, then you're categorized as a H1B dependent employer. And willful violators are somebody who had some wage violations are reported, right? So all these employees have additional checks in place. This is again standard LCA compliance requirements that they put in place. Now in terms of effective date, it's effective. There's a big change. They're giving about recent amount of time, similar to the DHS final rule. They're giving about 180 days for this, and that will be July 14th of 2021. But again, this requirement will apply to all H1B filings that are going to be filed after effective date, be it new, extensions, amendments, transfers, all sorts of things, right? So this is similar to DHS final rule as well. Now, in terms of impact is going to be pretty big, right? So if you look at it just from a number standpoint, there are about 39% of H1B LCAs filed in FY 2019 had third-party placements. 39% is pretty big, because in FY 2019 there are 635,000 H1B LCAs filed, and if you take 39% of that, that's close to 247,959 or 248 or close to 250k LCAs. So that's going to be a big number, and this is the actual report published by Office of Foreign Labor Certification. As you can see, 635k by quarter. They've also given the split up. So this is going to be pretty big impact. In terms of the H1B LCAs filing. and so it's going to impact all big and small firms. It's not like an exception. It's going to impact a lot of them, and practically it's going to be impossible for end clients to take these extra obligations because there's a lot of obligations that they need to carry out and a lot of overhead. So again, we need to wait and see how this will be taken forward. This is not published as a rule, but rather as a guidance. So if you see the actual document, they say it actually says that this doesn't have the law of force. So it all depends on the DHS final rule. So if the DHS final rule is taken out, then this could go away because of it's more of a guidance, nothing more than that. So hopefully, let's see, we'll keep you posted how things go. Thank you for watching, and do subscribe for getting regular updates.